Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, July 6th. I hope everybody had a really nice 3-day long weekend celebrating July 4th with family and friends. I hope you had a chance to get out and do a little barbecue, hit the lake, hit the beaches, whatever you may do with your family and friends. A good opportunity to also just reflect on your first half of 2021 trading. This is really the first day of the second half. And as we've been mentioning, we're entering the best 2 weeks of the year, historically going back to 1950. So let's get into it. Taking a quick look at futures. Equities are flat. All the action is in the commodity and precious metal arena this morning. Oil's up 1.6% and challenging, if not taking out, the November 2014 high. I believe that number is 76.90. Nat gas is ripping up a little over 2%. Copper's up 2.6%. Gold's up 1.4%. And if you want to make a mark on your gold chart, the next level of overhead resistance is 1814. That's 1814 on your gold chart, gold futures chart, whatever one you happen to track. Also, I have some additional commentary on the blog site this morning. I'm not going to get into it, but talking about oil, nat gas, copper has, after a overbought correction, is gathering itself and heading higher. Same thing with gold. Also, I've been making a little bit of noise on the blog post and certainly in the trading room about this reverse repo going bananas. On June 30th, it hit $991 billion. And to remind everybody, or if you're not familiar, reverse repo is when banks have cash on their balance sheet that they want to offload overnight or for a certain short-term period duration with the Fed. So they offload all this cash and get treasuries back as collateral. So this thing has been ballooning, has been climbing from essentially nothing to 991 billion on Thursday. And then now Credit Suisse savant Zoltan Pozsar is out with an over the weekend signal flare warning on this reverse repo. He sees it going up to 1.3 trillion in the weeks ahead. And I've put a link in the blog site to that article. I mean, this guy, Zoltan Pozsar, is regarded as the expert in market plumbing and is widely followed, widely tracked, widely respected, all that kind of stuff. Whereas I can just point out, hey, this thing's getting really big. It's unusual. It won't be a problem till it's a problem. I'm not smart enough to connect all the dots inside the plumbing and ramifications. Zoltan Pozsar can connect the dots. So I think it's worthwhile going to the blog post this morning and where I have a link to that article where you can kind of read in and see what he has in store for repo and all that kind of stuff. Something to certainly be aware of. Now let's just jump in. I mentioned briefly that historically speaking, the next 2 weeks are the best on the calendar. Best 2-week period on average going back to 1950. We've got a lull in catalysts. We don't have the FOMC until July 27th and 28th, where nothing's to be, no changes, most likely. Probably going to be a more talk about tapering. And then we've got the much bigger one out at Jackson Hole. Those dates are August 26th through 28th. So that's the FOMC picture. So this next 2 weeks, we're in more or less a pre-earnings run. You'll notice there's just a few names on this week's earnings. The next week will be the same. And then we'll be getting into the next season with the big banks, etc., etc. All that being said, we got to follow the charts because we don't deal in averages. We deal with the here and now. And, they could put a massive red bar in front of us. And next year they'll say that the first 2 weeks in July are historically the best since 1950. All that's still going to be, remain true. One bad data point isn't going to turn these 2 weeks bad. So I'm always a little leery and skeptical about, these historical trends, 7 out of 8, all that kind of stuff, because they can do anything for any reason and they don't follow a calendar. So what we've got to do is focus on the charts, respect our stops. Yes, I have a bullish bent heading into earnings. I am long a lot of stuff. But that being said, if it goes sideways on us, they pull the rug, we got to respect those stops, and historical averages be damned. We've got to manage our own positions. So have a bullish bias, but certainly with your stocks and with your positions, know where you're getting out and respect those levels. So what I want to do this morning is look at the US dollar, TLT, of course, go over the averages, and then the FATMAAN names, and then take a look at AMD. So, US dollar, critical. It's like the global wrecking ball. What it does has a massive effect all over the globe on commodity markets, etc. We laid out these scenarios a couple of weeks ago. What's happened since then? We laid out these scenarios back in here, and we've had an impulsive move higher, a little bit of a fib pullback, and now we've got a dollar breakout. Why? Because we've taken out the 200 in gold, which is at 190, 194, and we've taken out a band of resistance that has now become support. So from a technical standpoint, the dollar is open up to 93, let's call it 93.40. And what does that mean? Well, here's our little cheat sheet. Stable to falling yields, stable to rising dollar, should be bullish for FATMAN, bubble stocks, EV, solar, high beta tech, etc. And not be so hot for commodities, cyclicals, reopenings, industrials, basic materials. Rising dollar and falling yields is a headwind. That being said, nat gas and oil are not following the program, okay? Oil has gone up, nat gas has gone up in the face of a rising dollar, so that's not playing by the playbook. But what has been playing by the playbook is, we've been following the rip in FATMAN. We've been following the bubble stocks, EV space, solar, all that high beta stuff has really been working over the last 2 weeks. And I expect it to, but I want you to keep an eye, if you're not already long oil and nat gas and, those kind of things, they're rolling, okay? So keep that in mind. So on the US dollar chart, we are operating in scenario 1. now that we've broken above the 200, use the 200 as your go, no-go line. If dollar stabilizes here, it's at a certain level. If it rips up to 93, you're going to see it in probably see it in cyclicals, base metals, all that kind of stuff, basic materials. And if you see that this was a fake breakout and the dollar drops back below this 91, 94, just call it 92, pulls back in here and starts a down cycle, you're probably going to see a rotation or at least a hesitation in scenario 1 stocks and a rotation back to the financials, industrials, all that kind of stuff. So keep the US dollar chart front and center. Let's look at rates and bonds. Big symmetrical triangle. TLT, of course, trades inverse to rates. So when rates are falling, TLT is rising. We had a $5 consolidation between 135 and 140. We got the breakout. What does that mean? Measured move. What does that mean? $5 consolidation, breakout, targets a move $5 higher. We got that. 140 plus 5 is 145. We're there. We are hovering right below the 200-day average and this big downtrend line. You get a break above 145, and that's probably going to correspond on rates to a break below 1.4% on the 10-year. You're going to get this breakout. You got to buy that. Just plain and simple. Why? You've taken out the 200. You've taken out a big downtrend line, and you may see a flush in rates and this thing run up to 150. Okay? So I think that is the technical play. I think that is the trade. Doesn't mean it's a lock, but when you break out of a symmetrical triangle, when you're coming out of a long base, when you're taking out the 200, those are all green lights to get long. So I want to get long TLT above 145. I want to look out till probably at least the end of July into that FOMC meeting and possibly even into August. So put that trade, make that alarm. Even if you decide not to trade it, it's going to affect those scenarios we just talked about. If you see rates fall through the floor, you are going to see FATMAAN continuing to rip. You're going to see those high beta ARC names, Kathy Wood ARC complex, all of her names will probably go bananas or at least certainly get bids. So know those relationships and then track these key drivers like the US dollar and TLT. Moving on to the SPY 2-hour. Great couple of days here. We've broken out above the 2-hour channel. We're in blue sky territory. No natural sellers. Here's what I want you to watch for. We just talked about that $5 consolidation in TLT and how those box breaks work. It's the same thing in a channel. What do I mean? Instead of drawing a consolidation box horizontally, you draw the consolidation, or you look at this rising trend as a box. What do I mean by that? We've been inside the box, inside the box, inside the box. Something has changed. We got a breakout. That's bullish. But what you don't want to see is a return to the box. That's no different than a breakout from a from a horizontal consolidation. We talk about once you break out, you don't want to go back in to that trading range. What it would mean for SPY is that at a bare minimum, you come back in this range, you're going to test this midpoint line. And that's a move from 432 down to 427. That's not a disaster, but very often what you see is a move down to the bottom of the channel, and that is down around 421. Now, of course, as time goes on, these are going to rise, so we'll keep track of it. But all I'm saying is, now that we've broken out, the top of the channel becomes your stop for those of you that are long. Here we are on the 30-minute chart. Same deal. We've broken out above this channel. You get a break back below. Here it's only $1, $4.33. Another $1, $4.32. But if you see this go to the bottom of the channel and then a break below to fill this gap, blah, 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 you're going to start seeing it in the 2-hour chart. So we've got some wiggle room, but keep that on your radar after that breakout. And there's nothing says that we don't go higher for the next couple weeks, but at least now we know how to ratchet up our stops to stay long against those trend lines and not get lulled to sleep, in a bunch of long positions when and if they decide to go the other way on us. Qs, a little bit different look. At least the way I've drawn it, Qs have recaptured the bottom of the channel. And so now, from a technical target perspective, the door is open for a run to the midpoint of the channel, which is, say, up here at 362, 363 area. We do have a gap from Friday that will need to be repaired at some point, and we've got smaller gaps, all the way back down that will need to get repaired at some point as well. So from a technical standpoint, we're overbought on RSI. That's not a reason to get out. This is strong overbought. The only time you will look at this and be concerned is if we drop out of the overbought area. So now keep your eye peeled on RSI at 70, and you can draw this trend line. I should have put it in here, but draw a trend line from this low up towards this high. And if you see RSI start to roll over and break trend, that's a warning sign. Here we just got a bull cross on Friday. So these high level bull crosses are positive. Those are bullish signs, and we're all in the bullish regime. So from an indicator standpoint, everything looks good. Down here on price, it looks good. Recapturing this channel is bullish, and now we want to see if we can get a push up here towards the low 360s. Here it is on the 30-minute chart. Bullish PPO, bullish RSI, recaptured the midpoint, technical target, as we said, up here at the top of the channel. That would be a location where you would probably want to roll up your stops and your strikes. I would sit up taller in the chair. If we lose the midpoint of the channel, come back down here, start testing this gap, start testing the low side of the channel, that's when you really got to pay attention. And, of course, if you're an active trader, you can short a break of this midpoint line, look for a move down to the gap, and then see if you can't get a gap fill of about $2 down towards the bottom of the channel, and I would be covering it there. Or at least if you wanted to stay long, or excuse me, if you wanted to stay short, I would be rolling down my strikes. Make sure you got paid for all that. And then if you think there's going to be more turbulence ahead, you can hold your short after you roll down and then look for a move below 353, and then that would open a bigger move down to 351. So let's just see how it plays out. IWM has been struggling, and that's the rising dollar, that's falling rates. I've said for a while, you see QQQ running, going to be difficult for IWM to follow that move because they hold different stuff. Qs are in, the tech weighted stuff. IWM is weighted with, financials, cyclicals, reopening, all that stuff. So when you see rates falling, that's usually abandon cyclicals and be in tech, and then that puts a drag on IWM. And so there'll be a day when it'll be the opposite. Everybody will rotate back into cyclicals and financials, and then you'll see IWM rip, and you'll see the Qs be soggy. So look for that relationship. Today, 229 is your pivot on IWM. I think you can be long above and tactically short below. Remember this gold EMA, the 200 on the 2 hour is the same as the 50 on the daily. So you could see a move down here towards this 50, and I would imagine that would hold on the first tag. Here it is, exploded, not much different. Here's this 228.75 you can use as your pivot on a break below 227.50, and then down towards this 224.50. On the upside, if you got long here against this level, look for 230 spot 50, and then a breakout there will take you to 232. Moving on to FATMAAN. Facebook took Friday off, didn't do anything. You've got a resistance level here at 356. What we want to see is a breakout there and a run to the top of the channel up into the low 360 range. So I would have 356 alarmed. I want to show you the daily, if I can get it here. Yeah, here we go. So we're well within this nice channel. A break above 356 here gives us an opportunity to recapture this midpoint line, and then that would open the door to 375. So keep this daily in perspective, and I would just keep ratcheting up your stops. Like right now, I mean, look, we're riding the 8 EMA. If you're in the dailies, stay long. I think we're going higher. And I would only get concerned if we dropped out of this daily channel here. In fact, if you weren't in and you're struggling with, where can I get an entry, and you happen to get a pullback to the bottom of the channel, that's where you're supposed to buy. And, here was an opportunity. We had this opportunity here the other day. A lot of people got that. A lot of people got the breakout from this little consolidation here at 336. And it's, we got a couple of very strong days, and then a little Fibonacci pullback, and then recovery. So Facebook looks good. Apple looks great. Had the gap up on Friday and a push towards 140. I think the door is open for a test of 144, which was the prior high. I think that was back in, it was quite a while ago. We can look at it right here on the daily. Yeah, back here, back in mid-January, we had a push up to 144. So Friday, we had talked about if you were long to rotate up your stops to 138, especially if you're a short-term trader. So now we're looking for 144. If you got a back test of 138, I'd certainly be a buyer there, walking the 8-day up. If you're in the daily time frame, just stay long. I think it's fine, and I think the next technical target is 144. So short-term traders, I would use 138 as your pivot, or if you're not in, let me go back to the chart here. If you're not in, if we take out 140, get long against 140, and then look for 144 as the next level. Tesla has just been consolidating between 675 and 690. We've had some fake moves above, so we need to really see this thing break out. And if we get that breakout, I think we're going to go. We may see a little hesitation here at 710, but I really think we're going to be up into the like 725 area. I believe this gap is 725 to 735. I have to check that, but this is just consolidating this move here. So I view this as a bull flag. You know, if you've got the money and the time and you're trading the daily time frame, stay long against this 670 area. And if you got a pullback into 670, you could be a buyer at the bottom of the box and simply either play for 690 or have a great long entry for a more duration trade and wait for the breakout that'll push it up into the mid 700s. So from that standpoint, Tesla looks really good. Notice the PPO reset at 0. You get the bull cross here. That's very positive. That's a bullish signature. And then you'll see RSI make a move above 50 and hopefully emphatically, and then that'll get the indicators synced up with an up move in price. Microsoft has been unbelievable. Here we've got a 60-minute rising trend. Big move Friday morning and just ran all day. Hopefully you got that if you're an active trader. We've had this for quite a while. And that was just a great move. Be aware the top of the channel here at 280. That's going to be a place where I'd certainly be, if I was a short-term trader, I would certainly be either ratcheting up or taking it off and see if there's a reaction that would pull back to the middle of the trend, and then look for a re-entry long. I want to show you the daily chart. Nice uptrend, but now we're at the top of the range where we see that's been a problem in the past. So if you had bought down here at the bottom of the channel, and we had this on the, going way back, we had this on the breakout of this level here. I have to go back and see exactly where that was, but we had a consolidation and we had a breakout, and it's been nothing but up, walking the 8-day, as you can see. So at 280, if you're in the daily time frame, I would be looking to at least book some of that win And if you're in options, I would certainly be rolling up at 280. Make sure you take all this to the bank. But just from a technical perspective, I do expect either a reaction down or a sideways consolidation to build up some more energy after this run. And you can see, top of the channel, bottom of the channel, top of the channel, bottom of the channel. So this may either come back to just the midpoint or come back all the way. And certainly if it came back all the way, that would be another great spot for a long-term entry. Amazon, monster move on Friday. If you were playing the lottery game, frankly, you're rich, because we had a 2.27% move, almost $80, going from here up to here. You'll recall we were looking for a higher high after this higher low. So now I'd like to think that Amazon is back on track. What would cement that? That would be a break above this 35.20, where I would certainly be long, and I'd be looking for that all-time high or this box break, which we've been watching up here at, whether you want to call it 35.52 or 35.54, that's all. I mean, $2 on a $3,500 stock is nothing. So what we want to see here is this breakout above 35.50. Hold that breakout. Get long in duration and look for a $600 measured move. That'll take us north of 4,000, 4,100. And just remember the axiom, easier trading follows hard trading. We've had hard trading for a year. When you get that breakout, don't underestimate how quickly it could go up $400, $500, $600. It might do that in a month, in 6 weeks, after it took a year of doing nothing. So that all eyes are on this level. And of course, everybody on Twitter, the algos, everybody's got the same chart. So we'll just have to see. But you definitely want to get long above 35.50. Netflix, not doing much, kind of frustrating. For you guys on, short-term traders, you know how expensive the weekly options are. And when it just does nothing, you just get eaten alive. I was in a couple of those last week. But from a technical perspective, all systems go. We're trading above this 532.50. The next level is 542.50. And if you're in the daily time frame, stay long. I mean, I think we're going to get this gap fill all the way up to 550. So I would stay long Netflix. Google, we finally got the big move out of this consolidation range up to, and we said 2,500 was our technical target the whole time, and you got that gap and go, and hopefully either you were already in or you had your alarm set and you said, hey, this is go time. You grab your long, set a stop at the gap, and then you had a great ride. And I think I sent a note out on Friday. If you were in that trade, you got to roll up to 2,500 now and book that $50. Whatever you made on Friday, you want to make sure you book that. And the interesting thing here on the daily chart, we're not extended at all. I mean, all we did was consolidate within the channel, and then towards this channel low, you got the breakout. So I can see a run to the midpoint, which would put it up near, let's just say 25.75. But if you get a breakout there and everything goes bananas, this thing's going to be up at, 2,600, 2,650 in a flash, maybe kind of like that Microsoft move that we've been watching. So really strong chart and behaving well to the technical. So I really like that. SMH, I think you can use 259 as your pivot. Look for this break above 260 and a half to take you up to 262. But as we've been discussing, the bigger picture on SMH is a breakout and hold of this $35 consolidation. So as long as we hold that breakout, the technical target is 295. And so I would stay long against this 258 with a stop just below, because you don't want to see price come back into the range. And if it does that, that would be a warning sign. And then lastly, let's wrap up with AMD. $13 consolidation, broke out from the downtrend, broke out from the consolidation. The move targets a move to 100. We're halfway there. I'm looking for a move up to 98 or 100 in the next, week or two. And then from there, we will see if it can break out to new all-time highs. I've mentioned the order flow in the options market. A lot of bigger players positioning for moves north of $100, looking out into August, September, December of this year, and even into January of next year. So they're looking for higher prices in AMD, and I am too. I'm long that. So hopefully we'll all get paid on AMD. So let's wrap it up there. Jump over in the show notes. You'll find links to the blog site, and you can read that article by Zoltan Pozar on the reverse repo. You'll also get access to the additional commentary I have this morning on oil, natural gas, gold, copper. So take a look at that. New time listeners, really appreciate you visiting the channel. I hope you find the levels helpful today in your trading. And if you can get to the point of trusting those levels, I think you're going to become a better trader as you work on your execution. And longtime listeners, thanks for hanging out with me. I hope your trading's going well. Please pass the link along to others in your trading group, Facebook, Twitter, wherever, Discord. I really appreciate it, and help me grow the channel. So talk to you next time. This has been Chris Buss with Traders Profit Compass. Have a good day of trading.